Forex Nation, what's up guys? Welcome back to the channel. Welcome back to another video. As we continue our Blueprint Summit series, I hope you guys are enjoying the actual series. If you're just new to the series, please make sure to go back and check out from the very beginning so you can understand how we trade our strategy and you can get the most value from the actual set of videos. In this particular video, we're going to break down the levels, we're going to break down peak formations, we're going to break down resets, we're going to break down failed resets, and ADR. So a lot of information in this particular video. That's why the video is very long. Please watch the entire video. There's so much good information in this video throughout the entire thing. So I hope you enjoy it. Without further ado, let's get it started. Cool. All right, so let's talk about peak formation, resets, and levels. So first, let's go ahead and talk about peak formations. So peak formations, so these are essentially the M and W at the top or the bottom of the market maker cycle. So market maker cycle being the MAAW or the WVVM. Peak formations are what the M and the W are in the cycle. Okay. They usually happen after 3 times ADR in one direction has been completed. So what is ADR? ADR, as we'll learn about in a couple minutes, is the average daily range. So every pair has an average daily range that it moves, whether it be 50, 100, whatever. You take that daily movement, you times it times 3, it gives you a total ADR of whatever for that pair. So, example, if pound USD has an average ADR of 100 pips per day, then 3 times that would be 300 pips. So typically, you would find pound USD would move 3 times or 300 pips in one direction before you get an actual reversal. Does that make sense? So that's what ADR is. So usually 3 times, after 3 times ADR in one direction, you typically get a completed pattern and then you should get a reversal. So the ADRs though, they're not always perfect. So there's a specific range that I found that works the best. And so we're looking at, typically can be from 2.5 to up to 4.5 times its own ADR. So meaning, for that same example, let's say pound USD, instead of going 300 pips, it might go like maybe 270 and then reverse. Or it might go 400 pips or 425 and then reverse. So the ADR varies because it just depends on how many orders they need before they can actually reverse. Remember that the biggest disadvantage that we have is that we don't know what numbers they need to match, how many contracts they need to get before a reversal is made. So the one advantage that we have is, speaking of just the peak formations or the market maker cycle here of the MAW or the WVVM, is the fact that we know they typically move within 3 times ADR because they can't keep going up and up and up and up and up without having some sort of retracement. Okay, because if not, it throws everything off whack, throws the currency, the world economy, all completely off track. So the confirmation of these peak formation happens once you get across of the 13 and the 50 EMA on the 1-hour chart, meaning that once the M forms or the W forms at the bottom, it's confirmed on a 1-hour chart once you get a crossover of the 13 and the 50 EMA. Once that crossover happens, typically that's when you start to see consolidation of a level, basically level 1. So market resets. So what the hell is a market reset? And why does it happen? So in the simplest form, the resets happen when market makers need to push price further than 3 times ADR. So let's say that market makers want to drop pound USD, let's say, I don't know, 700 pips. And they want to drop it, they want to sell it, right? They want to drop it down 700 pips. So can they go down 700 pips straight down? No, they can't, right? So they go down 3 times ADR, 300. They go up 100 or 1 times ADR. And then instead of continuing to go up, they know that their move essentially is always to keep going down. But because they can't just go down 700 pips, they have to go up at least up 100 and then continue to go back down again. So that up move of 100 pips, or that retracement that goes up and then it breaks and continues to go down for another 300 pips, that right there is the reset. It's just a way that market makers can keep going in one direction. And when you look at it on a bigger time frame, it just looks like it's just keep going down, 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 down. But if you go to a lower time frame, like an hour time frame, you'll see that they just keep resetting. They just go down 300, go up, reset, keep going. They just keep doing that over and over and over again. But if you look at it on a daily, it'll seem or appear that, holy crap, they just go down for months, and they really don't. So the resets usually happen at level 1 accumulation. They can happen at level 2, but nowadays it's not very likely. It used to actually be reverse. They used to happen more at level 2. Now they actually happen more at level 1. These resets are confirmed once they break the closest peak formation. So meaning that if, same example, GU, if it goes down 300 pips, okay, and then it forms the W, right? So you have a full MAAW, 300 pips down. They go up 100 pips to level 1, consolidate, consolidate, consolidate. And their whole objective, right, was, let's say, to keep going down. They'll drop the price down. Once they break that previous low, that W, that's when the confirmed reset happens, right? So that's when you know for sure it's a reset. There will be times where they just go back down to retest that same W low that was created. And so that's when it's an unconfirmed or a failed reset. But once confirmed, you can expect another 3 times ADR in the same direction, right? So you get 300 pips down, 100 pips up, and then another 300 pips down, or whereabouts. So 270, 300, whatever they want to do. So if the attempted reset fails to break the closest peak formation, it's considered a failed reset, and you can expect the movement to continue in the original direction. So meaning, same example, GU straight down 300 pips, makes the W, goes up 100 pips, consolidates, and then comes back down, and it looks like it's going to be a reset, but it doesn't break the W that is meant to break, and it just stays there, and it finds support there, and it goes right back. You can expect the move essentially to go right back up. When it fails, when that reset fails, it basically creates a multi-day M or W formation, and you can see it clearly on a 1 hour or 4 hour chart. I'm going to show you all this stuff when we look at the charts, but I just want you to visually see what's happening. So all a reset is just a way that market makers use. It's an excuse of how they use to keep going down, down, or up, to keep the trend going. That's all they use it for. The best time
to see these peak formations, or the best time to see peak formations in general, I believe it's going to be the 1 hour chart. So anything that we talk about, levels, resets to the 1 hour time frame. All right. Here's our examples of failed resets. You can see price came from this peak formation high, went down 3 times ADR, gave you a peak formation low, went up, and notice how it only went up about 169 pips. Right? So 169 pips is not 300, obviously. So we know that this is likely to reset. But what happened? It never actually went past the low to do that, right? So it didn't pass this low. It went right back to it, didn't pass it, right? So this right here is a failed reset. Go back up again, thinking that we're going to go back up, but did it do that? No, it went right back up to the same place, 160 some odd pips, and then started to come back down. This time, you see though, we actually broke the low here with this move. And you could see from here to here, if you measure it out, it comes out to 3.5 times ADR. So just to draw it out for you, this would be your peak formation high. Here's your level 1, level 2, level 3, or peak formation low, which is your W, right? They come up, they give you the V, the first V here, and you think, oh, it's gonna go back up. But no, it just keeps going down. Instead of turning around here, it doesn't do that. It just keeps going. And it keeps going down and it breaks this low. This right here becomes your reset. You can expect 3 times ADR down in that direction at least. Whenever you have a reset, and it's a confirmed reset, meaning that it passes, this low here, this reset here becomes your new peak formation high. And then just go down 3 more levels. So if we look at this here, where are we at currently right now on pound USD? We just had a peak formation low, and if we measure it out, we're about 213 pips. Are we anywhere near 3 times ADR yet? No, right? We're not anywhere near 3 times ADR. So you might ask yourself, how do I know what the average ADR is, right? So if you look at your indicator, right here it says ADR 93. That's basically the average ADR for the day on that pair. So you literally take 93 times 3, and that's how you get your 3 times ADR. So what does this allow you to do? Why do I love this so much? Because it allows me to project out essentially where I think how high price might go. So if it doesn't reset, right, if it doesn't do any resets and it just goes 300 pips out, you're looking at somewhere here. Now, is it coincidence that that's the same place where price action has structure, right? If you look here, there's all structure right here, right? That's 300 pips. That's 3 times ADR. Also, is it a coincidence that it's the same place where the frickin' 800 is? So you see how it all starts to basically come together. Let's just say if they want to reset again, right? Then if they want to reset again, cool, no problem. Where could they go? Where could they possibly go from here, let's just say, if they decide to drop and reset? Well, if we take a look, and if we drop down about 300 pips or so, it's probably down here. somewhere around this area. Now, just pay attention to the fact of the number itself, 135, right? It's a round number. It's a psychological number for us traders, or for literally for humans, right? It's down there. So if we start going up in time frames, right, like 4 hours or something, 8-hour time frame, you can see where previous price action has reacted around that area, 35, 34,800. But you can see the reaction that you've gotten. Look, right here, right here, right here, right here. So it's there, right? It's all there. So if they do reset, it's very likely to go back down to this place because it's a round number. It gives you 3 times ADR, so forth and so on. So you have a plan, essentially either way, that they decide to go. You can always go all the way back up to the top here, and you can see how this basically works. So you go from this top here, from this very top, this is peak here, you go down 4.2 times ADR down, peak formation, you go back up, you don't make it anywhere near, obviously 3 times ADR. You come back down, you break the low, this reset, this is the full reset, you go down 3 times ADR, comes up, tries to reset, fails it, goes back up, fails it, and then actually makes it, and that's where we are now. But you can keep, literally, you can go back, and you can see 3.5 times ADR, goes up, stops, goes back up, breaks that, creates a peak formation high, 2.7. I mean, you can literally keep going and going and going. Now, you can keep, the way that you know that you're doing this correctly is because you can literally just keep going. So just by looking at this, 347, so this looks to be a low, this looks to be possibly like a reset here, 227, 242, 211, this clearly is a reset here, and then that goes back up to a failed reset. So you can literally start to point this out. So you can just keep going with it, and you just, I mean, it's incredible. Once you start doing this, like, you will never look at it again in a different way. So this leads me to the ADR and directional bias. The ADR and directional bias, I mean, knowing where the peak formations are and how to calculate them via ADR will give you your directional bias. So if I know that I'm at a peak formation here, what am I looking for? It's a sell, right? That's it. It's a sell. If I'm coming off of peak formation low, I'm looking for buys. Like, don't overcomplicate it. So I think the hard part for a lot of traders is you're looking for, let's say you're looking for buys because you're coming off a peak formation low here and you see it moving back up, right? There's no reason that this should be moving back up because you just had a peak formation high. So you should be looking for sells, right? But the fact that this broke this little structure here and now it's starting to move up, it should tell you that you're very likely to have a reset, right? You're very likely to have a reset. So you should start to look for buys, and so you end up getting buy setups. There's going to be times where you're coming off of peak formation, and let's say like you're coming off a peak formation low, and so you're looking for buys, but then you end up getting, let's say, a sell setup, right? So what do you do at that point? Do you take the sell setup or do you skip it? What do you think you should do? So here's a good way to know whether you should skip it or not, right? If you are coming off of, if you're coming off of a peak formation low, right? If you're coming off a peak formation low, and you have the crossover, the 13 and 50, and you're seeing this, and you're like, I'm looking for buys, right? But you get a sell setup. If you're at the first level here, you should not take the sell setup. You should skip that trade. However, if you go up to another level and you're here, let's say you're level 2, you're not at level 1. Level 2 very possibly could give you a sell setup. That doesn't mean that you're changing your entire bias on the overall direction of the market. So if you're at level 2 or higher, you can take a sell setup here knowing that that trade is going to be a very short-lived trade, because your bias is still to buy more because you haven't gone to 3 times ADR. And so you'll see that you will literally have the opposite setups appear, and I mean really good ones appear, but they have to be above the first level. So if we're here, we're at the W, and here's level 1, we go up to level 2, and let's say we've only gone up, let's say 200 pips, we know that there's still 100 pips left to go, right? So we know that the overall direction is still a buy. But let's say at this level 2, we get a really good type 1 setup that meets all of your requirements, right? It's got really good extension outside of the Asian range, so it's extending out. It gives you the second leg inside of either the London or the New York box. You get a railroad track on that second leg. You get all the confirmations are there. You can use, in this case, you're going to be able to use the EMAs as your take profits because you're in an overall uptrend, right? So you're going to have the 50 is going to be here, the 200 is going to be here, the 800 is going to be here. So you can take the trade and basically take it to the EMA. And then once that trade is over with, now you can look for essentially buys the next day. Or it could be possibly the next session. If this happens, let's say, if this setup here were to happen in London, it could go down to let's say the 200 and then give you a reversal in New York. So ADR, again, is just the average price movement of whatever pair you're trading per day. If you like to use like a website or something like that, you can use the investing.com website. They actually publish it for that also. So here, I'll share it in the chat there. So if you go to that website, that link in the chat there, it'll give you all of the average movement of price for all of the pairs. So you'll see all the AUD pairs, all of the CAD pairs, Euro pairs, Pound pairs, USD pairs, all that. All you have to do is take that number, times it times 3. Okay? So levels. What are levels? Levels is basically this. In the bigger picture of the cycle, that's a level, and level 3, peak formation, low. Some people call this level 3, other people call it peak formation. But all level is a consolidation that creates, in this case, it would create the A, go down, consolidate, create the A, go down, and consolidate and make the W. Now, there are going to be times when the pattern will look like this. You'll have 1, 2, 3, and then peak. And then here's peak formation high. The question is, why are there 3 levels and then peak at the top, peak at the bottom? The reason is because once they get down here, once market makers get down to this area down here of level 3, or once they get down here, if they realize that, hey, we want to make this move back up, but we don't have enough contracts to do it, or essentially saying we don't have enough people selling for us to make this move of buying. So when they don't have that, they will make another level. So it would basically turn into, and you'll literally see 3 levels and then a peak formation. A lot of times, what you're going to end up seeing is you're going to end up seeing stuff like this. You're going to see a lot of V shapes at the very bottom. So you'll see your M, your level, your level, your level, and then the very last thing, the peak formation, is going to be V. But the only reason that's done is because they realize that they don't have enough orders to go back up. And they need more people to sell so then they can take the opposite of that and buy. So like here you have your M, your level, 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 and then a V. So directional bias. I simply get my directional bias by being able to identify the closest peak formation. So I know what direction I'm looking for to trade. You can use the EMAs if you want to. So like the 800, if price is above the 800, obviously they're going higher. But for me, I love just using peak formations and the actual movement of price. So this is why for me, it's hugely important to track where my peak formations are. Just because I know that once I know where I'm at, it's done. I know how to trade. I know what direction I'm trading. So on this pair here, I'd be looking for buys actually, because we just had 3 times ADR, and we just had, this is level 1 here. So I'm looking for buys. If no buys appear, right, if there's no buys and it actually drops, then I'm already thinking, okay, this might turn into a reset and they might want to push it lower. I don't do anything. I don't speculate on anything. I let the charts tell me. I don't like to guess. You know what I mean? So people ask, what do you think pound USD is going to do this week? I don't know. Give me a day or so. Let me get data. You know what I mean? I can tell you, well, based off of this, I expect it to go up because I know I'm coming off a peak formation low. But I know that at any point in time when they want to, they could keep going down, right? But I know that would just be a reset. I know why they're going down, basically. You know what I mean? Every day this updates. So the more data that I get, I'm constantly updating this. So as it changes, I may have to change something around, but whether it's adding, a reset or whatever. This, by the way, like levels, resets, all that stuff right there is the hardest. It's the hardest part of the strategy itself. This is what takes the majority of traders the longest time. It's also the most confusing of everything for the traders. But once you understand the simplicity of it, and don't try to just complicate it. There are some pairs that are, I don't know, sometimes they feel like they're impossible to track because of the sideways movement, or a lot of sideways movement that they do. So I believe a lot of the Swiss pairs do that, and this is why you don't see any Swiss pairs on my chart, because I don't like to trade them. But as long as you can keep track of the pair, you're good. As long as you can understand what's going on, you're fine. Like on this one here, like I just have peak formation high here. This is just a movement sideways. I can't do anything with that. You know what I mean? So I can only go off of the determination that I'm still looking for sells here because of I'm just still coming off of peak formation high. And it's just been consolidating for like a week and a half. Once it tells me anything different, then I can change it. Or then I could change my thought process. But there's no reason to speculate. Just let it show you. They will show you what they're going to do. You just have to be patient. Again, you get paid to literally wait. Yeah, the first indication, Hassan, is going to be whenever you're expecting. So like here, if you're coming off of peak formation high, in this case, right? And it goes down, you get 1350 cross, right? So you're good. So you're like, cool, I'm looking for sells, right? But as this plays out, this is Monday and goes into Tuesday. If I'm looking for sells, why did I just get a buy here? A type 2 multi-session buy. So that's your first indication right there. It's like, if I'm looking for sells, why did I get a buy setup here that breaks this structure when I should be getting a sell setup to go lower and break that? Well, the ADR, I mean, on this particular one, so pound NZD has an average ADR of 152 pips a day. The ADR really in this case here has nothing to do with it. I just know that I just counted. If you go back, I just came off of, 3 times ADR from here to here. You know what I mean? So because I just came off of 3 times ADR, I should be looking for sells. The problem is I didn't get a sell setup. I got a buy setup. So because I got a buy setup and I broke this little structure here of a level and I went up higher, that's your first indication that a reset could happen. And so just look, as the rest of the week played out, you got a sell, or you got a buy setup here, and then you ended up getting a sell setup here, but then you went right back. You see that? And then this right here, this is not a trade. Obviously, this is during the Asian session. But you did get a trade set up here to go back up. So again, that's what the clues are, that you're getting buys when you should be getting sells. You know what I mean? That's the clue. Is that you're looking for sells, but you're like, I'm not getting sells, I'm getting buys. And it's not like they're bad buys, they're good buys, or they're good buys, and they're trading essentially above the range of the level, So that's where that comes in. You can see this is another setup here as well on Friday. Right here during London. This is a type 1 setup. So if you go to the 15-minute chart, here's a type 1 setup here. Here's another type 1 setup. So you're getting setups to buy instead of sell. That's going to be your first indication of, wait a second, there's something wrong. Just remember to keep it simple, right? If this is your pattern from here to here, should be around 3 times ADR. The way it works out typically is this here is 1 times ADR. This here is 1 times ADR. And this here, this last move should also be 1 times ADR.
All right, guys, I hope you enjoyed that particular video. I hope it brought you some value. Please let me know in the comments what you're thinking about the series so far. What do you like about it? What would you like it to be better? If you can please do me a favor, like the video, subscribe to the channel. If you need any more help, especially since we just covered peak formations, if you need help with peak formations and you're not quite sure, join us on FXM Plus. That's where the value of peak formations comes in, because you can literally see what my peak formations, what my charts look like every day right before London session. Guys, thank you so much and have a great weekend.